Happy New Year 2023 on this Sunday morning for Sunday Coffee. I have a piping hot cup of coffee or tea for this chilly January morning, but we are still coming to you from Florida, overlooking from the inside the gentle lapping waves of the beautiful Gulf of Mexico. My motivation for this podcast channel is to broadcast good news stories, interesting people, and food for thought. So pour yourself a nice hot cup of tea or coffee and take a deep breath, get cozy, and enjoy a break for some uplifting conversations. And today's book is Understanding Disaster Insurance, and New Tools for a More Resilient Future with Some Hope by Carolyn, Kousky, published by Island Press in 2022. Hi, Carolyn. Welcome to the show.
Hi, thank you so much for having me.
Well, I'm going to tell the audience a little bit about you first. Carolyn is the Associate Vice President for Economics and Policy at the Environmental Defense Fund. Previously, she was the Executive Director at the Wharton Risk Center at the University of Pennsylvania, where she also directed the Policy Incubator. Her research focuses on disaster and climate risk management. She has also examined multiple aspects of disaster insurance markets, disaster finance, and public policy surrounding issues of risk management. She is a vice president of the California Climate Insurance Working Group and a fellow for the Resources for the Future, and a non-resident scholar at the Insurance Information Institute. So with that introduction, Carolyn, how are you doing today?
I'm doing great. Thanks so much.
Well, let me ask you, we want to start off with some good news. So we got some good news coming in this book, right?
Yes, I try to focus on some exciting innovations and new thinking that's all designed to help improve households' well-being and help solve global challenges. So hopefully, while it can talk a lot about disasters and be a little dry, we get to the uplifting part as well.
Well, that sounds good. Well, I did read in your book a little interesting factoid. Now, Lloyd's of London, the insurance company, started in a coffee house.
They did. Yes, absolutely. It started way back in some of the earliest coffee houses in London where people would gather for, the coffee of the day, which I take it was not actually that good back then, to also exchange news and information. And one of these particular coffee houses was where groups would meet that ended up providing essentially some of the first insurance for ship voyages. And eventually, over time, they left the coffee shop and got an actual office. And Lloyd's of London, one of the most famous insurance marketplaces, was born. But yes, it all started with that coffee.
With that coffee. So what's in your cup this morning? What are you drinking?
I've actually switched over to black tea. So I have black tea almost every day.
Oh, you're a black tea. Yes, me too. I'm a black tea with just a pinch of turbinado sugar this morning.
Oh, that's nice. Yes.
Okay, good. I got another tea drinker here today. So let me ask you, I always start with, what was your motivation for writing this particular book?
Yeah, it's a good question. I have been thinking about how we manage natural disasters for quite some time and had been thinking about the important role that insurance can play in those. And I think it's a piece of the sort of disaster recovery puzzle that's maybe underappreciated sometimes in terms of how important it is for people to have those financial resources in order to rebuild and get their lives back on track. And yet was starting to see some emerging concerns as climate change is making a lot of different types of weather related extreme events worse. That's making it harder to insure them at the same time. And so that's starting to get the attention of policymakers and communities whose individuals are sometimes struggling. And I realized that maybe there was a need to help people understand what insurance is, what it does, why it's important, what some of these problems are, and then also how we can use it as a tool for good and help improve people's lives with it. So it's a little bit of a niche topic area, but I think it's one that's becoming more important as we keep seeing more and more disasters.
Well, yes, and I chose this book because, as probably everybody knows, or a lot of people might know, especially in Florida, we're having a big problem with insurance. And these hurricanes, they used to come slow. They kind of build up and they still do, but there's some that come in and intensify pretty fast and hit us pretty hard.
Yeah, absolutely. You're a little bit down at ground zero or something for hurricane in Florida, so
Well, let me ask you. Okay, I have to admit, I was a homeowner and I just stuck my head in the sand and signed it because it was so overwhelming to read through all of this legal jargon. Let me ask you. Let's just start at the beginning. What is risk, and why do we have insurance?
yeah, absolutely. And I'm like you too. It's very difficult to get into all that fine print. It's something we can talk about in a minute, but insurance is really a way to protect yourself financially from a really large loss that would otherwise be very difficult to handle. And so insurance is most important for those sort of things that would impose really big costs on us when they happen. So the need for a big medical expense or a car accident where you have to make substantial repairs or something happening to your home. And so in this book, I'm focused specifically on insurance that provides that kind of financial protection to your home and its property from disaster events in particular. And I call out disaster insurance as a little bit separate from some types of insurance that people are more familiar with, like you have your homeowner's insurance policy, because it turns out that disasters are a little bit hard for the private sector to handle. And as a result, we've had some fracturing of coverage for them. So when people have their standard homeowners insurance now, it provides them protection for certain types of losses, but some of the disaster losses actually aren't covered at all in homeowners insurance. So your homeowners policy is not going to provide any protection against flooding, for example, or against earthquakes. You have to have separate policies to cover those. And for other types of things like the wind damage from hurricanes in some places, like in Florida, there's much higher deductibles and other types of limitations on your policy. So that's where it kind of requires getting into the fine print. But to make sure that when that disaster happens and you face all that damage, that you have the money to repair and rebuild. Because without the insurance, disasters cause enormous financial strain for households, and it can be difficult to get the needed money just to make your home safe and habitable again, and repair any contents or your car that was damaged. So it's really important to have those resources.
I like you had a quote in here that rebuilding always takes much longer than people realize. Being in Florida, I do know that people would talk about how long it takes to get federal funding or get this. It could take a year or two, and that's true.
Yeah, lots of sources of money take a long time to get to people, much longer than I think people anticipate before they have to, deal with that situation. So there is some limited federal assistance that comes after big disasters like a major hurricane, but it can take a really long time to get to people, and it tends to be much limited than people realize. The sort of immediate funding you can get from the federal government, the FEMA dollars, tend to only be a few $1,000s. And if you've just suffered property damage, that's $100,000. That's not going to get you very far. And even insurance right now can take a while to get to people, weeks or months. So there is also a challenge in making sure that households have the resources they need in those immediate days and weeks right after a disaster event. And it's one of the kind of gaps in recovery that I talk about a little bit in the book, is how we make sure that people have what they need to immediately, begin repairs and get into safe housing and that type of thing.
So, what kind of disasters are we looking at? You're not talking about just small, like roof damages and stuff like that. We're talking like, I guess in California, you got the earthquakes.
Yeah, we're talking about the types of disasters we're talking about are when something happens that impacts an entire community of people at the same time. So not the, random tree that falls on your roof, which is, devastating for that household to have to deal with those repairs. But that's what homeowners insurance is very good at covering, that type of thing. But those types of events that impact everyone. So earthquakes, big wildfires in California, hurricanes, other types of major flood and storm events, all those types of, what you consider sort of catastrophes.
So, what could people do? Where do you start? I'm a homeowner. I'm going to go look at a house, and I'm thinking about how much it's going to cost to, say, buy a house. What do you do? What's the first step?
Yeah, so I think one of the first things to do is to be aware of the disaster risk of where you're choosing to locate, because it's always better to prevent disasters than have to recover from them. And unfortunately, today, lots of people move into a house or to a community without being fully aware of the types of risks of living there. And this is an area that I talk about as needing some reform in our public policies to make sure that people have that full information when they're deciding, people's homes are their biggest asset. They should have full information on what the potential risks are. And right now, so let's just take flooding as an example. It'd be important to know if you were moving into an area, into a home that might flood, but not just know that it might flood, but what does that mean specifically in terms of impact? So, are we talking about a home that very occasionally gets an inch of water in an unfinished basement? Or are we talking about a home, on the Florida coast that could be hit with 15 feet of storm surge and completely knocked away in a major hurricane event, right? So, there's very different types of risks. And then, how you handle those would vary a lot, right? And so the first thing is kind of understanding what those risks are, and then are there things that might be a feature of the house that would help lower some of those risks? So if we're talking about inland flood risks, homes can be kind of elevated to make sure that the first floor, for example, doesn't flood when you get the occasional flooding. So look at those kind of features of the house, and then also have understanding of what that means for the cost of ownership, because insurance can be expensive in highly risky areas. And it's important for homeowners to know that before they move into a house, because if you're thinking about what you can afford and thinking about what that mortgage payment is, how much that insurance, payment is going to matter a lot.
How can you find information like that? Because I know in your book you talked about that those things are available, but it can be kind of hard to find too.
It is, and I think it's too hard to find. So one of the things I'd like to see is, communities and states and sort of governments helping make it easier for people to find that information. I think what would be really ideal is when you go to a listing for a home and you see all the other things that matter to you. How big is it? How many bedrooms are there? How close is the school your kids might go to? All those things that you might think about when you're deciding where to live. You also have stuff on, is it at risk of flooding? If so, what type? How bad? Is it at risk of wildfires? So that can just be integrated into people's decision making. And right now that's really hard. There's some limited information that's sometimes made available by government, and there's some other sources that are trying to fill the gap. So I'm on the board of a nonprofit called the First Street Foundation that's trying to integrate that type of risk information into online housing websites, for example. So information, the ability to find that information is growing, but it's not where it should be yet. So it's an area that we need to see more.
Well, it's interesting. In my landscape architecture program, we had ecology class, and I was in the Florida Keys, and I noticed that there were certain areas that flooded just regular rainfall. There were some areas that couldn't flood if you just poured water out the door on the ground, and it just would immediately soak in. And my professor's like, "Yeah, well, that's because that's a hammock and that's never going to flood. And that's a mangrove. It's always going to flood." And then I realized that behind the house that I used to own, there was a wildfire one time. And I looked out and I thought, oh, now I know why, because it was a rock pineland and it's prone to fire. It needs fire to regenerate. And if I hadn't taken that ecology class, I wouldn't have known.
Yeah, absolutely. It sometimes requires a deep understanding of place and environment that we're not taught, or when we move somewhere new, we don't have the experience to know either.
So, in insurance, you talked about in your chapter. What is insurance? And like he used to tell me, he says, "So what's included, and most importantly, what's not included? What are some kind of things I need to start looking for?"
Yeah, good question. So we talked about how, for example, flooding is not included in your homeowner's insurance. I think it's sort of an odd feature of the US insurance system that we don't have anything called hurricane insurance. You can't get insured for hurricanes. We have flood insurance and we have wind insurance, which is included in your homeowner's policy. So knowing which types of disasters are included and which are fully excluded is the first cut. But then we're also seeing, particularly as some natural disasters are getting more frequent or more severe, that insurance policies are also sometimes limiting the amount they pay for different types of damages. So I mentioned hurricane deductibles before. So if the wind damage is from a named hurricane, often the homeowner has to pay a lot more of the damages than they do if it's another type of loss. So deductibles are one thing to think about. Another thing to think about is something called a sublimit, which all these terms sound kind of technical, but they're ways that unfortunately you end up getting less money from your insurance company than you would think. And so a sublimit is when they don't pay you the full amount of your insurance policy for certain types of damages. So when you purchase an insurance policy, you decide how much coverage you're going to buy, right? You're going to buy $100,000 of coverage, $200,000 of coverage, and you make that decision based on how much it would cost to repair your home. But it turns out that policies are starting to have these things where, well, if the damage is from this, we're only going to give you a small amount. So let me give you an example was the ice storm in Texas that I'm sure listeners had probably read about. It was in the national news. And a lot of people found that when their pipes burst, even if there was, say, $10,000 of damage, they had a sublimit for burst pipes of only, say, $2,000. I'm sort of making up those numbers. But the point is that they had a sublimit on burst pipes that was much lower than the actual cost of damage. And so the problem with this is that you might think like, oh, I bought homeowners insurance, I'm fine, I'm going to be financially covered. But then if your policy has a lot of these limitations on it, something bad happens and you go to rebuild and you're left without the money that you need to make those repairs. So some scholars that I talked to in writing this book were making policy suggestions like maybe we need to mandate certain minimum standards in insurance policies because most people just don't get into the weeds of the fine print. I think about insurance a lot, and I didn't get into the weeds nearly that much when we first purchased our insurance policy. So the question is, how do we make sure that consumers are really protected and know what they're buying?
Yes, and I like this. I'll read this quote for your book. Most people don't think a lot about insurance. Often, insurance decisions are made for them. A lender requires homeowners insurance, an employer narrows down health insurance options to only a couple of choices, an agent recommends a car insurance policy, and consumers often just choose the cheapest or easiest option and then move on. That's actually a recipe for disaster.
Absolutely. And we've seen that it can leave families really financially struggling after disaster events when they just don't have the resources they need.
Well, let me ask you now, out in California, what happened after the earthquakes out there? They started a minimum for their insurance policies. How did that work out with the public disaster insurance programs out there?
Yeah, so California is a good example of one trend we see when it comes to disasters, which is that. So we've talked a little. Let me back up for 1 second, if you don't mind. We've talked a little bit about why disaster insurance is important for households, for the consumer, for the protection it provides them. But we haven't talked as much about how insurers offer this kind of protection. And the problem with disasters is that, as we said, we're talking about those events where lots of people get hit at the same time. That means if you're an insurance company, you see lots of kind of quiet years where there's not a lot of claims. And then the big disaster happens and everybody files a claim at the same time and probably for a lot because they've suffered really bad damage. And that means that you have these sort of very spiky losses. And insurance companies need to be able to have enough money to pay all those huge claims without going bankrupt. All the ways to do that are kind of expensive. They have their own savings accounts, they purchase their own insurance for insurance companies. And that can make the cost of disaster insurance much more expensive than other types of insurance, where, say, for automobile insurance, they can basically pay the claims in any given year with the premiums they take in any given year. And that business model just fundamentally doesn't work for disasters. So I say all that to get back to your point, which is that we see governments intervening a lot because sometimes the private sector simply can't provide disaster insurance at a price point that people can afford. And so then there's just no insurance that they can buy. And in those cases, we've seen the government step in because it's really important that people, for all the reasons we talked about, that people be able to financially protect themselves. So we have a lot of government insurance programs when it comes to disasters. So in California, they have a state program, the Earthquake Authority, that makes earthquake insurance available when a lot of the standard homeowners policies insurers sort of quit covering earthquake after big earthquakes in California. But we also, back to Florida, right? Florida has a state program too for people who can't find homeowners coverage or wind coverage or can only find policies they can't afford. And we have a federal program for flooding since insurers have long ruled flooding out of their policies. So it's this weird landscape of like the private market and these public sector programs.
What do I do when these disasters happen and they have also you talked about your book, Bond. I didn't know insurance companies buy insurance for themselves.
Yeah, insurance companies have to have their own insurance too, but it and it's even it's most important for these types of disasters we're talking about because the losses can be so severe for the insurance company, they have to have their own protection. And so what that means is that essentially the system is diversifying risk globally. So a global reinsurance company that provides insurance to insurance companies is offering coverage for hurricane risk in Florida and wildfire risk in Australia and flood risk in Germany and pooling all these different risks together. And so it's very much a global system. And recently, they've also developed products that essentially make use of the financial markets to help manage insurance. So that's the things like the catastrophe bond that are different ways to help provide the protection of that kind of global insurance, but at a lower price point. So there's been a lot of innovations in sort of how you do this kind of risk transfer and risk pooling in a way that can help make that financial protection more widely available.
Oh, that's a good term I want you to talk about is in insurance. I noticed in your book you talked about risk transfer and that's what an insurance company is really doing for you. Could you explain to us about risk transfer and what that means to consumers?
Yeah. So the basic idea of risk transfer is just that individuals or households or businesses might have risks that they face. So you're a homeowner in Florida and there's a risk that a hurricane's going to come and really damage your house. And that's a risk you really don't want to have to take because if a hurricane wipes out your home, it could leave you really financially devastated. And so you'd like to hand that risk off to someone else. And that's essentially what insurance is doing. You pay a small annual amount that's predictable. That's your insurance premium. So you pay this little bit every year so that you don't have to worry about the big bad thing happening. And you've passed that off to the insurance company. So you've transferred it to the insurance company for them to manage. And then similarly, the insurance company doesn't want to have to worry about how they handle paying all the claims when a category 5 storm hits Miami. So they hand that off to a global reinsurance company. And it kind of creates a little bit of this sort of upward cascade of helping sort of spread the risk among many players who are kind of better able to handle it.
Okay, so how do we improve disaster recovery? What new business models and products can we do? So I'm a homeowner. I'm listening to this podcast and I'm doing my due diligence. What do I do next?
Well, I think some of the interesting innovations we're just starting to see emerging, and they might not be available yet for all consumers. But some things that I think have a lot of potential are let me talk about two different areas. One is how do we link insurance with actually making people safer and making sure that they suffer less damage to begin with? Because we'd always rather, not have to face all that damage than have to rebuild our lives. And so we're seeing some interesting models. For example, giving the easiest one that you've already seen a lot of is giving people discounts on their insurance if they adopt certain risk reduction measures in their home. We're also seeing tools to help people rebuild safer so that in the next storm or the next fire, whatever the next disaster is, they're less likely to sustain damage. So that can be things like when you file a claim, your insurance company gives you some extra money to make sure you build back stronger and in a way that is less likely to be damaged when the big disaster happens again. We're also seeing insurance companies starting to help consumers beyond just managing the potential losses of disasters, but contribute to solving global challenges. So, for example, climate change, insurance policies that might pay you a little bit extra at the time of rebuilding so that you can incorporate energy efficiency measures into your home or maybe install rooftop solar or other types of measures like that. So, there's ways to think about using our insurance to build back in a way that's safer, more resilient, and also more environmentally friendly. So that's one interesting path that we're seeing. And similarly, we're seeing on the kind of climate change thing, new insurance that might help incentivize people to do more to lower their emissions, like pay as you go auto insurance. And so instead of just paying a set amount in your premium, the amount you pay depends fundamentally on how much you drive. And the insurance companies actually like that because the risk of them having to pay a claim on your car is fundamentally related to how much you drive. And so this is a really nice option for consumers who don't drive that much, right? Because then you're sort of lower risk than the average, and so you can end up getting more of a deal on your insurance payout. So those are some of the types of things we're starting to see that might help people incorporate some changes that would be, broader than just the disaster recovery piece.
Well, you also talked about in your book making insurance more inclusive and how not having insurance affects lower income people or even anymore the middle class much more than people with more wealth who have even bigger properties and more insurance. How can we make insurance more inclusive and why is that important?
Yeah. So low income households actually need the protection of insurance the most, but they're the least able to afford it. And I say they need it the most because they're much less likely to have access to any of the other substitutes for insurance that would help you financially recover. So they tend to not have or have significantly less savings. They tend not to be eligible for credit and extra loans after a disaster event, and often have challenges navigating some of the federal aid processes. And so they don't have as much access to these other tools that more affluent homeowners can use for their rebuilding. So they need insurance sort of even more because of that. And yet it's often at a price point that's just fundamentally out of reach. So there's again been some new types of insurance policies in this space. One example comes from Puerto Rico, where we've seen just recently in the last few years, they've adopted a new type of insurance called microinsurance. And it's small scale policy. So they don't pay as much as a standard homeowner's insurance policy. But the benefits of it are that they pay it very, very fast. And part of that is because it's something, we're going to get into some technical language here, that's called parametric. But let me explain what that is. When you suffer damage to your home with a standard homeowner's insurance policy, in order to get your payout from the company, they send a loss adjuster, an actual person who shows up at your house and looks at the damage and assesses how much was actually caused from the disaster and how much you need to repair. And that determines how much money the insurance company actually gives you. Well, that process can take a really long time, as we were talking about earlier, especially in a big disaster when there might not be very many of those people, or certainly not enough to go around. And so the whole process can get delayed. And then you might also argue with your insurance company if you don't think that they gave you a fair assessment. And so all of that can delay you getting your money. And again, for a more affluent family, they can rely on their savings, they can use their credit card, they can do other things to tide them over while they're waiting. But that delay can also be, much harder on a low income family. So this type of policy instead pays you a flat amount based on some observable measure of the hazard itself. So the ones in Puerto Rico, for example, when wind speeds exceed some threshold over the island that would be indicative of a major hurricane passing through, then you automatically get $5,000 in your bank account, or whatever the limit was that you bought. So they're kind of a totally different approach where you get this fast infusion of cash and there's no negotiation with an insurance company. So, on the one hand, that can't replace a standard homeowner's policy. But on the other hand, it does a lot of other benefits, like getting dollars quickly and not having to go through a lot of complications with your insurer. And we've seen from some survey work we do that a lot of people don't have a lot of trust in their insurance company when it comes to the claim payout process.
Well, that's true. An old friend of mine, there was a hurricane that hit Pensacola and they went back and forth about did wind cause this damage or did water cause this damage? It was like, tastes great, less filling. He finally got it, but it took a long time.
Yes, and that's another problem with the separation of wind and water damage and having two insurance policies, and then neither wants to pay. So they're pointing fingers at each other to try to get them to make the payout. Maybe another interesting innovation related to highlight is sort of fundamentally rethinking the insurance business model. So there's a company out there now called Lemonade that's gotten a lot of attention, an insurance company, because they've focused a lot of attention on this fundamental misalignment of incentives at the heart of insurance, which is that you as the consumer pay this money to the insurance company in your annual premiums, and then a disaster comes and you expect that claims payout. But at the time of a disaster, every dollar that they give you in a claims payout is a dollar less profit for them. So there are real financial incentives to underpay consumers. That doesn't mean all insurance companies will, obviously, but there is this incentive problem. And so the founders of Lemonade wanted to get rid of that perverse incentive at the heart of insurance. So they've developed an entirely new model where they group you with peers based on a charity that you'd like to support. You pay your money into the insurance. They take a set amount for operating expenses for the company and then pay claims that year. And anything that's left, they donate to a charity, the charity of your choice. So when they're negotiating claims, it's not changing their amount of profit. That was fixed and taken out ahead of time. And so it really gets rid of that perverse incentive to not pay claims. And on the flip side, they also think it helps reverse the incentive to try to be fraudulent in the amount you need because you know that you're actually hurting a charity that you care about if you file a false claim too.
Oh, that's what was the name of that company again?
They're called Lemonade.
Lemonade. Okay, well, I'll have to go look that up. Now, also, you talked about in chapter 13 about ecosystem services and how, of course, that's going to get to what I like, about how they have protected some places for flood control and wetland control up in the Charles River in Massachusetts. So, what are they? Are they encouraging? Are insurance companies encouraging this, or what is? Can you tell us more about that?
Yeah, so there's a number of different ways now that insurance companies are trying to help support conservation and restoration objectives. So, how do we help preserve ecosystems exactly for those services that they can provide? And there's a number of interesting models out there. So, and they range from insurance companies that have been set up to focus specifically on the needs of conservation groups and the type of insurance coverage they need to engage in those protective activities, to targeting their investments at things that help support the environment, to ensuring nature itself. So, one very interesting model that emerged in recent years was the issuing of an insurance policy for a coral reef. This was off the coast of Mexico, and some of the beneficiaries of the coral reef, in terms of the storm surge protection it provides, as well as the recreational and tourist amenities, got together and created a trust to help protect the beach and the reef. And one thing the trust did was purchase one of these parametric insurance products. And the idea is that really big storms, the reef provides protection actually to the coast against that storm surge. But in really severe storms, the reef itself can be broken up and damaged, and coral can kind of break and fall off. It turns out that if scuba divers go in right away after the storm and start reattaching the coral, it can help restore that system and protect it and help it regrow much, much faster. So the idea of this policy is that when a certain magnitude hurricane crosses over the reef, the trust again immediately gets those dollars, which they use to then pay divers and rent boats and get people out on the reef to begin that immediate restoration work. But the idea of ensuring a natural asset as opposed to built assets was very new. And so now there's a lot of talk and thinking about how that concept could maybe be extended into other types of systems and situations.
What can consumers do to be better informed and buying their insurance or any kind of insurance? Because you're talking about risk, talk about auto and health insurance. What can you do to be a more savvy insurance buyer? What kind of new products and services are out there?
Yeah, I think maybe one of the things to do is to be a consumer who asks a lot of questions and find your insurance agent or your real estate agent or other folks that are helping assist you in those decisions to better understand what risks you face, what type of solutions might be available to you, and to think carefully about how insurance fits into your overall sort of financial plan and your sort of disaster thinking, by which I mean sort of think about what types of risks are you facing and what type of protection do you need for those, because not everybody needs the same types of insurance or faces the same types of risks, right? So it really has to be sort of a tailored process. But unfortunately, it can sometimes be hard to get the information you need. So I think the best strategy is to just be sure to ask a lot of questions. Like when you see your insurance agent, what's covered, what's not, what should I be worried about, those types of things.
So, when you went through your insurance policy, what did you find that you needed to change or upgrade or downgrade?
Yeah, I discovered that there was a lot of other types of limits in my policy that I wasn't aware of. So I knew that flood's not included in my homeowner's policy, but I realized, for example, that there was a mold exclusion, so that if there was ever damage from molds, that wasn't going to be covered, or if there was damage to my foundation from the roots of plants growing near the house, that wasn't going to be covered. So there's a lot of, very specific things that get kind of line itemed out of your insurance you might not necessarily be aware of. So you could ask your insurance company for a list of all those exclusions.
Oh, I didn't even think about that. They actually put in there a limit for plants damaging your foundation.
Yeah, I had that one.
Oh, wow. I'm gonna do a devil's advocate question. I was thinking about this. What if we just got rid of insurance? What if we just decided that just throw it to the wind, we can't afford it, life happens. What would that happen? What would society look like? What would happen if we just decided just time to get rid just go away. We're just tired of it.
It's a really good question. I think insurance enables a lot of really beneficial economic activity that requires taking risks that are too difficult for one person or one small firm to handle on their own. And so we wouldn't be able to live in hurricane prone areas if it was going to bankrupt us the first time an insurance, I mean, the first time a hurricane came by. And surgeons wouldn't undertake risky medical procedures if they thought they could be sued and bankrupt if something went wrong. That's why we have medical liability insurance. And people wouldn't build skyscrapers if they didn't have insurance protection for employees injuring themselves when they're high off the ground. So there's just a lot of things that we do as a society and in our economy that provide all sorts of benefits to people, but that really require insurance as a foundation. And people might not realize how foundational it is to all these different types of activities.
Is there any parting thoughts you could think of to tell people? What are some tips and tricks? Anything else you could think of to tell people about for Florida? Or even what if you're just in Kansas and tornadoes, things that are just spur of the moment?
Yeah, I guess what I'd say is to pay attention to where you're living and also try to learn a little bit about how these risks are changing because unfortunately in a lot of areas we're just seeing them get worse. And so whether that's flooding in a lot of part of the country where I live here in Philadelphia, we're seeing a lot more intense precipitation events that's leading to urban flooding where our stormwater system just gets overwhelmed or increasing wildfire risk in lots of places in California. And when you move into a home, sometimes it's not for very long, but lots of times people think they're making a decision to stay there for quite some time. And so you need to think about not just the risk now, but how's it going to be changing in the future? And is this going to be a safe place, to live for many, many years?
Well, I didn't want to get into too much of the technical part of your book because this sounds like this is something people really need to sit down and go through and read. You've got a lot of really good technical information in here.
Thanks. I think the middle section can get a little maybe too technical and dry, but the first section and the third section I hope is a lot more interesting and engaging for folks than they might typically think an insurance conversation would be.
That's true. So I'm gonna let people know that that's there, and for them to go back and read through it. So, well, Carolyn, this has been a great, enlightening conversation. I'm going to go get my insurance policy right now, and without my magnifying glass, and I'm going to go through this fine print. Oh, that's an interesting question. Why do they make that print so small? Do you know?
Yeah, I don't know. Make it hard for you to do the digging.
Do the digging. But my cup of tea is about gone, and I know we've taken up a lot of your time today. Can you tell the audience what interesting and projects are you working on that we need to know about insurance in the future?
Yeah, actually, good question. So, a lot of this book was focused on how insurance plays a role in helping us recover from natural disasters. And I focused a lot on climate related natural disasters that are being influenced right now by climate change. And I'm now actually doing a project that's looking at the other side of climate change, which is our emissions of greenhouse gases and how insurance can actually play a role in helping reduce our emissions and move us toward a net zero economy.
Oh, well, that sounds really good. So we got another book coming.
We'll see.
Well, I'm going to tell everybody that this book it's a really great book to read, and it's one we've kind of gone over the highlights of it for everybody. We don't want insurance should be dry. It should be very interesting. We need to take a really serious look at this because you definitely don't want to be caught unprepared in Florida or California or anywhere and then go, oops. So, for everybody out there, this book is Understanding Disaster Insurance: New Tools for a More Resilient Future by Carolyn Kousky, published by Island Press in 2022. And thank you for listening today. Thank you for being here.
Thanks so much for having me.